Right, we'll go. We've got enough people in there. I think other people can come in and mix them in. Anyway, we go. Those of you welcome to Educate to Trade on a webinar on the Federal Reserve meeting. They meet every 6 weeks. Those of you aware, we had the ECB last week and we did a webinar then, and it was extremely boring because they didn't do anything. However, yet again, we don't know what they're going to say. We're prepared to react if they do say anything. And obviously, we've got Jerry and Brad, if he comes in, a few others who can join in and spiritually to say anything they can see untowards that may well move the market as such. We'll quickly go into it. Obviously, what's come out of the last 6 weeks that we're very much aware of in there is obviously the unemployment was massive. Those NFP a few weeks ago, 916,000, which was a record. And obviously with the Fed admitting that they want full employment, the jobless rate is at 6%. Full employment, I think, if I'm wrong, is something like 3.6%. There's no such thing as zero unemployment, doesn't exist. So therefore, again, GDP was very interesting. You see that on the top of the chart we had there. Obviously, Powell was looking for 6.5% over the next 3-4 months. Rumours it is there for tomorrow. Those of you who are looking at your calendar, the GDP is out on a Thursday at 1:30 tomorrow. And obviously, Mr. Powell, we're very much aware of that figure. Now, before he obviously stands up to talk at 7:30. So big heads up here. In a couple of minutes' time, they will come out what the interest rates are. And obviously, we expect the interest rates to be unchanged. They're obviously not going to be raised them because Powell's told us he doesn't want interest rates to be raised until late 2023 or after that. However, with all the results that come out, the figures that come out have been better. We're aware of that, to where the stock market is now and to where everything else is. He may turn around and say that will he use tapering? On the minutes, he said, when we see that and we are on track, we will say so. So we may hear that in the minutes. So remember, again, the minutes will come out, and that will come out slightly afterwards. Yeah. So let's whack it up on the shared screen here, as you can see, and work out what you're going to trade. Jerry, what you're going to trade?
Evening, mate. I'm looking at indices. I'm looking at gold. I'm also kind of looking at the 10-year.
Yeah, so in a way, Joyce made sense there on the 10-year. The 10-year yields we saw yesterday moved from 1.58 to 1.64. Obviously, if those yields go higher, as Bianca said this afternoon, she'd probably look at the Nasdaq as such, because that will move more. And we found that last time we spoke, the people would come in. I think the Nasdaq moved more when obviously Powell mentioned the word taper. So again, you pick the right contract to trade, unless you're really good. And Jerry's going to look at 3. He's a magician. I'm going to just look at Wall Street to come in and trade and what to see. It's hard when the news comes out because it's very fast, and you'll see it. Obviously, an algo can read the minutes faster than we can. So we'll try and translate what we see in the minutes, and we've got Jerry and a few others there can tell us what we see and what we take it, and what our view is on the markets. Again, there'll be if it is something in the minutes, which I think will probably the best action to trade. Yeah, obviously there'll be reaction then, and then of course we wait till 7:30 when Powell stands up and makes his statement of what he sees and what he expects to happen, obviously in the next 6 weeks before the June meeting. So there might be a pause. Remember last time the minutes showed nothing, so therefore we had a very a boring time waiting to see what to do at 7:30, and then we had to wait not just to his speech, but for obviously the Q&A afterwards. Those of you who remember Christian Lagarde on Thursday, it was extremely droll and boring experience. And I think in the end, we turned it off after 40 minutes. Again, the great thing about trading live or teaching live, you just don't know what you're going to get. Hopefully, we bigged it up a bit, obviously, on the minutes as such, and we'll go from there. We've only got not long to go, and we work out where we are in the minutes. Of course, until then, we'll keep quiet and shout out what you see. For those of you who are new and you're on the demo, don't worry if you're a demo. Have a look at the demo, work out your stops, and remember, if anything on the minutes is untoward, and you'll see a sudden move, that's because the algos can read faster than we can, and they'll go through it looking for certain words, certain prices. As the person said, the asset purchases are currently 120 billion a month. We may see a decrease in that, whether or not he loses the word forward guidance, and obviously the jobless rate, and whether the Fed wants 6 months of solid employment or the growth in data. Anything less than that, we obviously will be a reaction to markets. Very much like Christian Lagarde, FOMC unchanged, target stands at 0.25%. That's the same as before, nothing new there. Excess reserves unchanged at 0.1%. There's no change there either. So nothing in there in which to trade. Jerry, you see anything there?
Nothing so far, Neil. Nothing so far. Nasdaq is holding 13.9. It's just slightly above it. The 10-year is just gone above 165. It's 165.6. Gold has come off about 40 points. So it's gone $4, 1774 to 1770. So not much.
That we're basically saying is that we expect the Fed to be dovish. The statements just come out here. I'm just going to read it.
AUD USD move nice.
I'm just going to whack it on a discussion group what the statement is and try and read it at the same time. Federal is committed to use full range of tools to support the economy, the challenging time, therefore promoting its maximum employment stability goals. As per last time, the COVID pandemic is causing tremendous human and economic hardship across the United States. That's nothing normal in it. The sectors most adversely affected by the pandemic remain weak, but showing improvement. Inflation has risen, largely reflecting transitionary factors. The same, the path of the economy will depend significantly on the course of the virus. That's exactly the same. That's not moving the market. Committee will achieve maximum employment at the rate of 2% over the longer run, with inflation running below the long. That's the same as last meeting. The committee expects to maintain a accommodative stance. That's still dovish. The Treasury could buy at least 80 billion per month. That's again 120 per month. That's the same, Jerry. Yeah. Appropriate stance of monetary policy, the same.
Yeah. Like all these three that I've looked at, they're all back to where they were pre kind of 2-3 minutes ago. So
we look at this. If we look at the statement there on the minutes, we put it here. It's very dovish, so therefore dovish means it's probably good for the indices and no change. It's good for the market. You can read the statement now. I think on the shared screen, that's almost identical to what he said last time. And obviously, what we've seen here is that Wall Street has basically rallied 50 ticks. Nothing massive, but nothing's unchanged. I think when everyone spoke on live score and everything else pre a meeting, say 6:30, everything's exactly where people thought it was going to be. Again, we may go into what Powell speaks, but again, this could be a very boring meeting, and unfortunately, we've got to fill it up with something. The one thing I'll go into now, and obviously, what we did hope today was that Biden would be speaking after Powell. What happens that Biden took power 100 days ago. So therefore, he's going to make a speech on what he's done in 100 days since he took over from good old Donald Trump, if you can remember him, and what he wants to do in the next 6 months while he's in charge. Now, the president normally speaks twice a year, and he speaks to the Congress of the United States. He was supposed to speak in February, just like a month after he took over. Obviously, it was cancelled due to COVID. And he's chosen to speak today. He normally speaks at 3 o'clock in the afternoon, but obviously he's used his wisdom and talking at prime time in Washington at 9 p.m. Am I right? 9 p.m. is 2 a.m. our time. And it's very kind of Jerry to get up at that time to talk about what he's going to say. But other than that, unlike me, he'll probably be asleep. We just seen Wall Street again moving around a bit, 20, 30, 40 points. Again, it may look as though you've missed a trade of where we see Wall Street is here, but believe me, nothing really has come out of the market. Yeah. So I'm going to quickly say here, nothing still has come in there, so it's fairly quiet, and we have to wait until 7:30 really to trade. Yeah, you can jump in here if you know what you're doing, but I don't think anyone has any reason to trade. The FOMC committed to using full range of tools to support the economy. We said the same, economy policy, and it was a unanimous vote decision. Which was what we expected as well. So no change there. Going back to what Biden's going to do, of course, he has got this 2.3 trillion infrastructure proposal called the America's Families Plan. And maybe, I'm not sure Powell will talk about it, but obviously Biden's very much aware, and everyone else is how he's going to raise the money. His speech last week when he said, obviously, he was going to tax the Americans 43% corporation tax, brought the Dow off, was it 400 or 500 ticks in 2 hours? What's transpired since then, that you have to be earning over $1 billion in America to pay that tax, and what's also worked out, that will affect basically 0.3% of the American public. Now, what's going to happen now, obviously, is that where is he going to get the money from? This 1.6 trillion, which he wants to bring in the markets. And to me, that is what's going to be the interesting thing coming on to the 1 a.m. chat today. The good thing about that, do we miss out? We don't miss out. Why? Because the Wall Street shut as well. So therefore, whatever Biden says today will be busy at obviously 8 a.m. tomorrow morning, and we'll obviously be doing our morning Zoom at 7:50. You might even get Bianca to do it again because she's so good. Again, that remember before, if you go back to how important the address is, last year, which was I think was February, it was called the State of Union address, and that's who the president talks to. If you remember last year, Nancy Pelosi ripped up the speech in front of Donald Trump. So what we're going to proceed today, for instance, is probably everything that Donald Trump would have put in the market last year. Biden's going to totally change and use accordingly. Okay, so anything else in there at the moment? Nothing's really moving. Obviously, Jerry's very much mentioned the yields. On the yields, Jerry, what's our danger level? 1.75?
175, yeah, midpoint 165, baseline lows around about 152 and a half, 153. So yeah, and we've come off 165. So in the last 10 minutes or so, we did pop into 166, but we're back below at 164. So it does look like we are kind of tilting a little bit to the downside.
And is that just the base of the dovish stance?
Yeah, I'd be agreeing with you there on that. Yeah, absolutely. So I think if you look at cross-reference that with the Nasdaq, as you said, the Nasdaq is slightly bullish, but there's wicks both sides. So the indices are pretty flat, gold is pretty flat, and the 10-year is off only like 1 basis point. So it's not really much. So overall, quite.
Just going on there, if you look at the discussion group, I've just put the app on for the FOMC conference meeting. That starts at 7:30. You can log into that. Just make sure that you're muted so we don't get a rebound on it. We'll go through it, and Powell will obviously go through. I think he basically reads the whole minutes out, and then he goes through how he transcribes to what he thinks. What did we say before? The GDP is, and of course, as Bianca said, there was this new figure out that we've heard rumors from. Do you hear anything about it, Jerry? The Atlanta Federal. I wrote it down somewhere, and as per normal, that's come out that although people are going for 6.5%. On the GDP tomorrow, which is obviously our biggest figure, the Atlanta Fed thing, they're looking at 8.3%. And obviously 8.3% is a massive jump and a lot higher. If you look at the projection from the change in real GDP from where Powell expected at the last meeting 8.3% would probably bring the what do we call it, the verboten word tapering up into the market, and obviously at 8.3%, I think we'd probably get a massive jump in your 10-year yields.
Yeah, absolutely. I think even baseline off your 8.3, a lot of the baselines are staying kind of 7.98. So even 8% is still a massive number.
And then those of you unaware about the GDP, and that's a great figure. China's GDP, once they get to 9%, everyone thinks, wow, that's fantastic. And to think where the GDP was 6-7 months ago, and to what America has done, obviously with the 120 billion that they pump in it every month, and the QE, and obviously the massive surge on non-farm payroll, which was basically 4 weeks ago. Remember, next Friday is non-farm payroll.
Yep.
Next Friday we start the whole month again, and with the ISMs out, the ADPs out, and the non-farm payroll. So in theory, we know America has improved because they're coming out of the lockdown as well. So if that figure is bigger, the questions that people are going to ask, is when will you change your track? When will you realise that where you thought as beforehand, we're looking at 3 months to change your view for the FOMC. Those of you who asked already, a few have asked the question already, where's the dot plot? The dot plot only comes every other meeting. So it's every 12 weeks. Remember, the FOMC meet every 6 weeks, which therefore works out 8 meetings a year. So again, all eyes will probably look at the dot plot in June. And obviously in June, we have the economic indicators change for the ECB. And obviously the same will probably happen to a lot of the US figures as such. Yeah. Again, we are exactly where Jerry says we're back to where we were pre 7 o'clock. Nothing's changed because the minutes didn't tell us anything. So any other questions you want to go out there, hit me or Jerry and a few others, and we'll try and answer them, because we've got a 20 minutes before the conference starts, and then even then it's probably going to be fairly boring for the 5-10 minutes after that. So in theory, what the minutes have come out, what they said was actually a no trade. Has gold come back to where it was, Jerry?
Yeah, it's pretty much back baseline 1774. It was beforehand. It's 1773 now, so pretty much flat.
So again, in theory, we ask ourselves on these big meetings and all figures: do we buy it or do we sell it? Or indeed, the one word that we'll probably hear from Powell in 30 minutes' time, or are we patient? Patient, probably, as we said this morning, is the order of the day, and we've probably seen it most of the times. Today, one of the best trades most of us had today was at 2:30, when obviously we saw Wall Street come off 80-90 ticks, and again the weird one, we saw the Nasdaq rally by Microsoft, Alphabet were extremely good last night. Again, those who've done your homework, is Bianca on today, or has she fallen asleep? Bianca's on today. You're here. Wow. Well, again, thank you very much for this afternoon. I hope you enjoyed it. Right. We did.
Thank you.
While we've got a bit of time, do you want to give us your rundown on the minutes, but also your rundown on Apple and Facebook?
Oh, gosh, Neil, you completely caught me off guard. No pressure.
You've only got 18 minutes to fill up my time. That's why. No.
I can sing Jolene for you all.
Yeah. I'll give you. If you sing Jolene, Jerry could come in the other side and sing Danny Boy. But I mean, it is interesting for this afternoon, or for this evening rather, if Powell says nothing and the market stays where we are. And obviously, those of you who remember yesterday, Wall Street's supposed to shut at 9 p.m. Whenever we get big figures out, obviously Microsoft and Alphabet are fairly important. Obviously, Alphabet being one of the 4 big fangs, and Apple and Facebook being the other, with 2 of the other ones, and obviously Amazon on Thursday. I'm pretty sure that the Wall Street and Nasdaq will shut slightly later tonight. So those of you who are trading will be able to incorporate that into your trades. And obviously, with Mr. Biden talking at 1 a.m., it could be a fairly busy after hours.
Futures good to keep an eye on as well, Neil.
Sorry?
The futures will be good to keep an eye on as well as an information for tomorrow.
But the one thing we put out there is that when we trade after hours, the spreads are wider.
Wider, yeah.
And
indeed.
also, anyone who comes in with stops or larger stops, the liquidity in the dark markets or the grey markets when we're shut will be fairly thin. So, in theory, I think the volume in things like the DAX and FTSE and Eurostoxx is very thin. Obviously, Eurostoxx is shut, but I mean, it is very thin. The same for Wall Street, because come 11 o'clock, 12 o'clock, most people will be trading Hang Seng, Nikkei, and the Chinese markets as well. So be very wary that if you wake up and expect to trade at 1 a.m., you probably could get. I don't think I traded Wall Street that early, apart from November the 4th last year when the elections were out. You could get a 10-tick spread on Wall Street. So it's a very wide spread. So again, the retail trade platforms we use won't be too helpful to us retail traders. Because remember, they take the other side of our trades. Again, Bianca, are you ready for your 1 minute Apple and Facebook?
Thoughts. I don't know. We have to, let's see what the actual results are compared to the analyst forecast. I mean, that's what everyone looks at, EPS, and probably for Apple, the number of iPhones sold in the last quarter, people will be looking for that. Facebook, not too sure, but I will be looking at the FANGs index. I've been talking about it the whole day. I think it's still in the positive. The only one still in the positive, still doing quite well. And 54 ticks for FANG. That's quite a lot. I mean, 7.78%. You could make some good profit. I think it was up till about 90 at one stage. I will definitely be watching that. Won't be trading at 1 o'clock in the morning, but will probably wait till 2:30 tomorrow to place my trades.
So you wouldn't. I mean, sort of a outside thing. You wouldn't say if the market, if Powell does something untowards, we can trade that to 9 o'clock. However, that if Apple and Facebook are untowards, but if we do get a trickle or a treat come 1 a.m. from Biden, because remember, Biden's only made 4 real speeches to the public since he took office. So unlike Powell, who's very used to speaking and is not so much a forward, and the same as Christian Lagarde, and in a way, same as Mr. Bailey of the Bank of England, Powell, as he did last time, could say something that could dramatically move the market. And as we said before, if the market is thin, and it will be at 1 a.m., because obviously Wall Street's that will be 9 p.m. in Washington, so they'll be actually having their coke and be ready to go to bed as such. That market could move a lot. So basically the same things we happened last time. He's going to work out where he's going to find for this American Families Plan to give all this money out and everything else. And people are very much aware, very much like Obama. If those remember in 2015, Barack Obama, when he came in to the Obamacare Act, where he tried to basically do the National Health Service in America and give free medical care to America. He had a great idea, a bit like Biden, to bring it into, but the Wall Street of the market didn't really appreciate it. And obviously, even though the market came off 10%, at the end of the year, the market did finish up. So remember, if all of a sudden he's got to do his sums again, Biden or his staff have, and work out where he's going to find this $1.6 trillion dollars to fund the market for this CARES Act. That he wants to take, and also the Carbon Emission Act, which obviously he wants to bring in by 2030, is probably another 4 trillion, and therefore he wants to bring this act in within the next 10 years. So all these things that I'm not sure whether Biden is a Q&A. I'm sure it's not. I'm sorry, he's got too much dementia to come in to face a journalist who are going to ask him those questions, but they'll very much be aware of those questions at 1 a.m. So again, to me, it does make a Thursday morning interesting. And again, those of you like trading Thursday, the big figure at 1:30 is the GDP. Why? those of you who have done one-to-ones to me, consumption plus investment plus government minus exports plus imports is the equation that comes into it. So therefore, that encompasses every figure that we cover, from retail sales to employment all the way through, and therefore that will equal where he sees inflation coming and everything else. So there we are, going on to where we expect Wall Street and the market to be. Not now, say for after 7:30, but even if Powell says nothing as such, I think the meat on the bone will probably be coming into Biden's speech, and obviously before that, Apple and Facebook. Unfortunately, I think Powell's probably got the easiest job in the world at 7:30 because everything's in place. The only thing he's going to worry about is if the market overheats. And he has said before that he's very happy for inflation, and obviously it's going to be wage inflation now with the surge in NFP and everything else coming in. But he's happy to have I think, am I right? He's happy to have inflation overheating above 2% for a period of 3 months, which is 1 quarter, and it will go as far as 6 months. He's always mentioned that. So if all of a sudden 6 months ago we saw inflation at 2%, and remember your 10-year yields, as Jerry says, at 1.75, I think, I don't know, if those yields hit 2%, that would definitely, you would say, hit the tech market by what, 2-3%?
Yeah, easily.
Easily,
I think,
yeah. So
I think the dangerous number that they're looking at on the 10-year, that I'm seeing across the board by a lot of analysts, is 2.15. Because if they see 2.15 hit, then there is a sizable correction coming into the markets, and not just in tech. I think across the board, S&P, Dow Jones as well.
right.
I think so. That's
Quick word out there. Corey, can you hear me?
I can hear you, Neil. What's going on?
Yeah. Well, we've got Corey in here because Corey is our man from America. Where are you? You're Naples, Florida?
Correct. Yeah.
Right. But what's your view on Powell speaking today, and the view of where you think their non-farm payroll? Obviously, you're not a Biden fan, but how do you think that America's seeing that America's family plan?
Well, I don't think that Powell is going to say anything different from his prior speech, especially with Biden speaking tonight. I don't think he wants to overshadow that in any way, shape, or form. So I think it's going to be consistent with his last message. And as far as the American family plan, the Democrats are certainly on a spending spree. I just don't understand how they're going to pay for all of this. So it'll be interesting to see how he lays out this plan and how he anticipates the American people to pay for it. He's been consistently saying that households making less than $400,000 a year will not be affected. I think that might be accurate in the interim, but I don't think that would be the long term. I don't think that'll hold long term, especially if the Democrats continue to maintain control of the House, the Senate, and the White House. I just don't see that happening long term. So,
for those who aren't aware, Corey, because obviously we've got a few new people, everything else on the Senate, everything else. It's currently 49-51, isn't it, with Kamala Harris having a deciding vote? Yep.
Kamala Harris, she is the tie-breaking vote. So obviously we know which way she is inclined to vote. One interesting thing that came out this week is every 10 years the United States does a census, a U.S. census, and from that census they reallocate basically House seats based on the population. And if you look this year, California will be losing 1 seat in the House. New York will be losing 1 seat. Illinois will be losing 1 seat. I believe Pennsylvania will be losing 1 seat. Ohio will be losing 1 seat. So the common theme here is the Democratic controlled states are losing population, and they're all relocating to either Arizona, Texas, or Florida. Florida has been a huge, here in the state of Florida, we're getting a lot of people migrating from the north, specifically New York. And we're actually gaining a seat in the House of Representatives. Texas, I believe, will be gaining 2, if I'm not mistaken. So that'll be interesting to see how that kind of transpires, and hopefully those folks that are relocating from New York don't vote like New Yorkers and continue to you know, they're leaving New York for a certain reason, and it'll be interesting to see if they vote the same way once they relocate and become Florida residents.
Because I mean, yeah, am I right? You relocated.
Yes, I
Yeah.
relocated from a Democratic state. Correct.
All right. So
And
it's quite interesting because obviously most of us here are obviously from the UK. And obviously Ireland. Kyle, I'll miss that one out. Apologies, Jerry. And we see a different view, obviously, when we see the American markets. How you see it, with obviously the same thing. One question I was asked you, Corey, is that obviously the massive surge in non-farm payroll last month, 916,000. Would you say most of those jobs were lower end paid jobs?
That's a good question. I would, yeah, I think specifically in the service industry, that sector has really bounced back. I can only speak to here in the state of Florida, but that sector really down here has really taken off. So I think that that might be an accurate reflection of primarily in the lower paying jobs.
Corey, though, is that not tied to this whole reopening trade? Surely it is. Then a lot of that, like even you look at the retail sales last month, 9.8% or 9.5%, nearly double the forecast. So that's surely got to do with the amount of people that are moving, engaging, going to restaurants, shops, etc. So that's all got to do with the reopening then, really, hasn't it?
Yeah, and I would say that's accurate too, Jerry. The reopening, you know, some states like the state of New York and even my prior home state of Minnesota, they've lightened up on some of the restrictions, but there are still a lot of restrictions in place. Here in the state of Florida, we've been open for business pretty much this entire duration, with the exception of, you know, some mask mandates, but restaurants haven't shut down. It's been very consistent this last year plus. And as a matter of fact, a lot of here in Southwest Florida, a lot of the private, like the grocery stores, the businesses, they didn't even require mask mandates within those stores. My son's private school, none of the teachers, none of the students wore masks. So it was relatively normal here in the state of Florida overall, which is, you know,
Business as usual.
And business as usual. And I think that's what a lot of people saw, and that's why they were relocating down here. They're sick of paying the higher taxes. Here in the state of Florida, it's one of the few states where we only have federal income taxes. We do not pay state income taxes. So a lot of the Democratic states do have both state and federal, so you have that double whammy. But here in the state of Florida, the tax rates are considerably more favorable than a lot of the other states.
Now we're working out why you moved.
Sunshine, lower taxes, beaches, you know, life is too short. I'm from the north, so.
Yeah. Right. While we're there, we've got a couple of minutes. We've got the app there going in for the live press conference. I'm going to pop it in up there, and obviously Jerry or Corey or me will come in, and if Powell says anything untoward, we'll shout it out, and hopefully we'll get some movement in the market. But as we said before, the last half hour has been like watching paint dry, really, and there hasn't really been a trade, even though Wall Street has probably moved 30 or 40 ticks. As we well know, then Wall Street's busy, we saw a big move between 230 and 232 this afternoon. So any of you who think you have missed anything there because of the market move, believe me, you have missed nothing.
It's shaping up to be like a non-trading event, Neil, by the looks of things so far.
Again, from a trading point of view, Jerry's made that very valid point, is that, remember, there's no point trading if there's a no trade. If you're going to try to find a trade, and when it isn't there, there's one thing you can guarantee: you're going to lose money. And it's the same thing that in reality, for fundamentals of the news, we trade because there's a reason. And Jerry's going to look at that 10-year, that may move. It could move either way. Powell's going to try and be as dovish as I think he can be to try and obviously get that yield, 10-year yield down. He obviously doesn't want it up too much because he's mentioned that before. So I'm going to keep quiet. And if anything comes out, we'll shout it out. All right, Corey and Jerry.
Yeah, one. Cheers, Neil.
Okay.
Thanks, Neil.
I'm going to put myself on mute and we hear what obviously Jeremy Powell's going to say. Those of you who've got the link there, if you haven't got the link there, ask, and it is in the discussion group.
I posted a link there, Neil, in this chat as well, just for people who can't find it. All right.
I could be very sarcastic here, and on this music that's coming out, it's always the worst music in the world from the central banks. This is your chance, Bianca, to lead us into a chorus of Jolene, Jolene.
You got lots of jokes today, Neil.
Yeah.
You've been actually quite funny and entertaining, I have to say.
Interest rates near zero and maintain rates and on our balance sheet will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. Widespread vaccinations, along with unprecedented fiscal policy actions, are also providing strong support to the recovery. Since the beginning of the year, indicators of economic activity and employment have strengthened. Household spending on goods has risen robustly. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also increased. Spending on services has also picked up, including at restaurants and bars. More generally, the sectors of the economy most adversely affected by the pandemic remain weak, but have shown improvement. While the recovery has progressed more quickly than generally expected, it remains uneven and far from complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since March, progress on vaccinations has limited the number of new cases, hospitalizations, and deaths. While the level of new cases remains concerning, especially as it reflects the spread of more infectious strains of the virus, continued vaccinations should allow for a return to more normal economic conditions later this year. In the meantime, continued observance of public health and safety guidance will help us reach that goal as soon as possible. As with overall economic activity, conditions in the labor market have continued to improve. Employment rose 916,000 in March, as the leisure and hospitality sector posted a notable gain for the second consecutive month. Nonetheless, employment in this sector is still more than 3 million below its level at the onset of the pandemic. For the economy as a whole, payroll employment is 8.4 million below its pre-pandemic level. The unemployment rate remained elevated at 6% in March, and this figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Readings on inflation have increased and are likely to rise somewhat further before moderating. In the near term, 12-month measures of PCE inflation are expected to move above 2% as the very low readings from early in the pandemic fall out of the calculation and past increases in oil prices pass through to consumer energy prices. Beyond these effects, we are also likely to see upward pressure on prices from the rebound in spending as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transitory effects on inflation. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2% this year would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month.
10 years coming off of it.
Further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our goals, and it is likely to take some time for substantial further progress to be achieved. Our guidance for interest rates and asset purchases ties the path of the federal funds rate and the size of the balance sheet to our employment and inflation goals. This outcome-based,
keep it as dovish as you can possibly be, really.
Remains highly economical.
Gold's rally from 1776 is heading for 1780.
To conclude,
The
we
NAS
understand our
10
actions
years
affect
come off of it
communities,
as well.
families, and businesses across the country. Everything we do is in service to our public mission.
10 years
We
off
have
of it.
defended everything we can to support the economy for as long as it takes to complete the recovery. Thank you. I'll look forward to your questions.
Thank you, Mr. Chair. First, we'll go to Paul Kiernan.
Hi, Chairman Powell, thanks for doing this. I guess since I'm first, I'll go ahead and read out Howard's question from the last press conference. Is it time to start talking about tapering yet? Have you and your colleagues had any conversations to those effect? Thanks.
Thank you. So no, it is not time yet. We've said that we would let the public know when it is time to have that conversation.
No taper is obviously bullish.
We do that well in advance of an actual decision to taper our asset purchases, and we will do so. In the meantime, monitoring progress toward our goals. We first articulated this substantial further progress test at our December
If you look
meeting.
at Wall Street, 33966, point of control on the, if you look at the right-hand side there on the market profile, probably our next target.
Gold's rallying, Neil, as well. It's up about 60, 76.
John Allen, Reuters.
NASDAQ is up.
Thank you so much. The question is about what's going on with the virus and what if we don't reach a level of herd immunity per se. So in your scenario, thinking about the outlook in the
10 years down to 162 and a half.
have a model where you might start to still normalize policy, even if there's like a baseline of infections still going on, or how can you talk about how you're weighing those things?
Yeah, so and we have to leave questions about herd immunity and what that looks like to the health experts. But I would certainly say that what matters the most to the economic recovery continues to be controlling the virus. The economy can't fully recover until people are confident that it's safe to resume activities involving crowds of people. There may be people who are around the edges of the labor force who won't come back in unless they feel
those
really
of you who are new trading here, you know, certain words, certain phrases will move the market, as Jerry says. The word of that we're not ready to taper yet is definitely a very bullish a phrase that every computer and algo out there hit and bought the market, as we've seen. We've seen that again in gold and obviously NASDAQ and most other indices.
Lifting off and raising interest rates. So for asset purchases, we've said that we would continue at the current pace of asset purchases until we see substantial further progress toward our goals. So, and that is what it is, substantial further progress. For interest rates, as I said a moment ago, we want to see labor market conditions consistent with maximum employment. We want to see inflation at 2%, and we want to see it on track to exceed 2%. So those are our tests. We don't have an independent test to do with the virus. I will say, though, as I started with, you know, the path of the virus is going to have an effect on our ability to achieve both of those tests.
10-year come off, lovely, Neil. It's back to 162.
Gina.
I mean, just on those phrases alone, Jerry, isn't it? I mean, sometimes it's easy to be on the table, and that was it there. Obviously, going through the value low on the Wall Street, probably the same exactly on the NASDAQ as well.
Yeah, absolutely. The NASDAQ is over and higher now. It's up a bit off
I
low.
wonder what happens if
It's a sizable bounce here. It looks like it's going to break through 14,000.
you see some sort of return to full employment. You know, it seems like a lot of sort of the stability and inflation despite the fact that those have been so low and stable. And I guess I wonder how your reaction would be, or sort of how your reaction to that is how you're thinking about that.
Right. So it seems unlikely, frankly, that we would see inflation moving up in a persistent way that would actually move inflation expectations up while there was still significant slack in the labor market. I won't say that it's impossible, but it seems unlikely. It's much more likely that we would, having achieved maximum employment conditions, we'd also be seeing 2% inflation and be on track to see inflation moving above 2%. They tend to move together. So that's not to say inflation might not move up, but for inflation to move up in a persistent way that really starts to move inflation expectations up, that would take some time. And you would think that it would be quite likely that we'd be in very strong labor markets for that to be happening. If that actually were to happen, though, there's a paragraph in the statement on longer run goals and monetary policy strategy, which says that when the two goals are somewhat in conflict, we weigh various factors, including the time it would take to get back and forth. So we do. It doesn't really tell you what to do, but it tells you that we will weigh those two factors and how far we are away from them and how long it would take to reach them, were we to reach that sort of pretty unlikely state.
Thank you, Steve. Please, Lynn.
Thank you. Mr. Chairman, I want to follow up on Janelle's question, and I wonder if you can help us understand better your thinking about how COVID infection rates and the virus calibrate with monetary policy. As you recall, we had a major resurgence in the virus last fall, and I'm wondering, would you need to be assured that there wasn't such a resurgence coming before you began, I mean, for lack of a better term, thinking about tapering? And what kind of comfort level would you need? Would it be something that would be declared from the CDC or the World Health Organization, for example, downgrading the virus from a pandemic before you have the comfort level to reverse course on policy? Thank you.
Yeah, we really have just articulated the goals that I've just mentioned a couple of times, which is substantial further progress toward our goals before we taper. Now, that's very likely for us to achieve that. It's very likely going to be the case that we've also made really significant progress on controlling the virus through vaccination and other, those two things should more or less coexist. We haven't articulated a separate test for a state of the virus that we'd like to achieve because we're not experts in that area. We're really focused on the economic outcomes. And again, my guess is that it's very likely, it seems to me, that for us to achieve the economic outcomes, we would need to taper or to raise interest rates. We would also have to have made very substantial progress in getting the virus under control. Not necessarily fully under control. There is a possibility, of course, that we will have ongoing outbreaks over the summer, various regional outbreaks, and potentially next winter as well. But we'll be looking for substantial progress toward our goals, substantial further progress toward our goals as we think about tapering asset purchases.
Thank you.
Thank you. Victoria.
Hi, Chair Powell. I wanted to ask, you've talked a lot during this crisis about the need to have a lot of help from fiscal policy and monetary policy to make sure that there's not long-term scarring in the economy. And I was just wondering, given all of the policies that have been put in place, do you expect there to still be some long-term scarring? And if so, what are you most worried about? Where are you most worried about that showing up?
So I would say that we were very worried about scarring, both in the labor market for people being out of the labor market for an extended period of time. The evidence is clear that it becomes much more difficult if you're out for a long time to get back in and get back to the life that you had. Same thing with these small businesses, many of which are the work of generations. Were we going to wipe out many of those unnecessarily? That was a big concern. I would say that so far, here we are in late April of 2021, we haven't experienced that level of scarring either in the labor market or among smaller businesses. So we're not living that downside case that we're very concerned about a year ago. Notwithstanding that, we're a long way from full employment. We're, payroll jobs are 8.4 million below where they were in February of 2020. We've got a long ways to go. And
again,
also,
as we're seeing the market tick up more, Powell's been as dovish as he can. Those of you who are dovish are saying you have no interest in either raising rates, tapering, or anything else for the very foreseeable future.
It may well be. It seems quite markets. The number of the people who have those service sector
turtle. But remember, Wall Street is Nasdaq's gone positive, S&Ps have gone positive, made a new high.
We're working in February of 2020.
I think it breaks the POC at 33966. We'll probably see the value high very fast coming into the close. We've got an hour and a quarter.
Elevated levels of unemployment for up in the teens.
In theory, there is no reason at the moment to be short any indice. Those of you trading gold is basically making a nice rally, as Jerry said, because the 10-year yields have gone from being bullish 2 hours ago to coming up their high.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. The housing market
is the S&P, Neil, 42.3 online.
Bidding wars and all cash offers well above asking price. And this is happening at the same time that housing is becoming much more expensive for lower income Americans and people who are still struggling from the pandemic. Do you have concerns that there are localized housing bubbles or that there's the potential for that? And what is the Fed doing to monitor or address this? Thank you.
So we do monitor the housing market very carefully, of course. And I would say that before the pandemic, it's a very different housing market than it was before the global financial crisis. And one of the main differences was that households were in very good shape financially compared to where they were. In addition, most more people who got mortgages were people with pretty high credit scores. There wasn't the subprime, low doc, no doc lending practices were not there. So we don't have that kind of thing where we have a housing bubble where people are over levered and owning a lot of houses. There's no question though that housing prices are going up. And so we're watching that carefully. It's partly because there's clearly strong demand and there's just not a lot of supply right now. So builders are struggling to keep up with the demand. Clearly, inventories are tremendously low. We're all hearing those stories. And if you're an entry level housing buyer, this is a problem because it just is going to be that much harder for people to get that first house, and that's a problem. I mean, it's part of a strong economy with people having money to spend and wanting to invest in housing. So in that sense, it's good. It's clearly the strongest housing market that we've seen since the global financial crisis. And, my hope would be that over time, housing builders can react to this demand and come up with more supply, and workers will come back to work in that industry. So
again, in theory, it's fairly quiet. We can say that Wall Street's up, not Wall Street's up, Nasdaq's up, and S&Ps are up, but basically unchanged. Nasdaq's up, unchanged really. S&Ps are up 0.26%, and Wall Street's down 0.2%. So in theory, a fairly droll so far, but we're off our lows, and it'll be interesting to see. I think in the Wall Street at the moment, we're probably in a neutral territory. Those of you looking at the right-hand side, looking at the market profile, we're almost in no man's land now. If you were going to put an offer in, I was looking to sell, obviously, Wall Street at 33966. It's the arrow here on the POC. Yeah. And obviously, we'll be interested to see if Wall Street gets down to this value low of 33894, where we were probably 15, 16 minutes ago. But at the moment, I said from Wall Street's point of view, fairly quiet. For those of you who traded gold, and a few in the office were long gold, 10 out of 10 for reading that the yield curves move. And obviously, Jerry mentioned that before. And obviously,
I'm out of my go along now, Neil.
And I was just saying to George, how much money do you take out of that gold for a scalp, for a trade? And I think you're probably right in that. That's probably a nice trade on the day as such. And it'll be interesting to see if any other questions come up, how interesting that will be coming to the last hour. But in theory, it's been a fairly a dull FOMC meeting, and I've yet to trade since probably since about 3 o'clock.
Yeah, I got in at 1776 in gold, but I took 50 ticks, but I'm out now. So I'm happy enough with that.
And I think, as Jerry said, not expecting too much. And again, if all of a sudden, sometimes when we're busy FOMCs and maybe Biden was talking to everything else, therefore he says something untoward, we were thinking, okay, that for that phrase, for what he said, if he did mention taper or did mention that GMP was going to be very strong, you would expect Wall Street to probably move 100, 200 ticks or even 300 ticks. Because again, I mean, 340 ticks is 1%. Yeah. And I think we'll be aware of that. But at the moment, he hasn't said anything, that really has moved the market. Apart from the one thing he did say, that he said he wasn't even thinking about tapering, and that thinking about tapering, as he said the last time, would probably, what did he say before? When we see that we are on track, then we will say so. And he basically said again today that they're not even close to talking about tapering. So although the person asked a question, the same thing we was asked on these central bank times, if you were to ask Mr. Powell a question, what question would you ask him to get the best answer and obviously to get the market to move the most? And I think these journalists are trying the hardest. And obviously we said before, Mr. Powell is a very wise man, and he's not going to be fooled into giving the wrong answer to a multitude of high frequency traders or indeed hungry day traders from educate to trade.
The big takeaway there, Neil, as well, he said with the inflation above 2%, but he said for kind of a sustained period of time. So that suggests to me it's not going to be 3 months. I think they're looking at in the background probably 9 to 12 months by that. I could be wrong, but
I'd go with you. I would say at least 6 months, because I think he briefly mentioned it, I think, start of the year. So like Jerry said, he's basically, he doesn't want to give a date to anything. He said that before. He doesn't want to put a stamp like on a tin of food, consumed by, June 2021. But I think a considerable period of time, as Jerry said, we're working out now, isn't a month, isn't 3 months. And as Jerry said, it's probably nearer to 12 months than it is 6 months. He said very clear last time, the dot plot, that looking at 2023 before they raised rates. But he did say before that obviously they would taper before they raise rates. Well, they could taper a month before they raise rates. So you're looking in theory for that another 18 months.
Yeah, absolutely.
But saying that, even though he said all those things which are extremely bullish, Wall Street still almost unchanged, 60 ticks down.
It got a little bit of movement off that taper comment, but nothing significant. I think gold was probably the best moving one. It moved 50, 60 points, or 50, 60 ticks, 70 ticks even. So that was probably the best one. The Nasdaq rose about, off the bottom of that wick, it rose about 80 points into the 14,000, but it's come off there again. The 10-year yield is come off 165, but it's kind of climbing back up again. So I think it's all eyes on Biden now this evening at 9 o'clock, Neil.
And by the way, those of you who think it's 9 o'clock, it's not 9 o'clock UK time, unfortunately. it's 1 a.m. UK time. So obviously it's very nice of Bianca and Jerry to do a duet and be up for 1 a.m. But I'll be asleep. But then again, we said again, if you are going to trade at 1 a.m., I wouldn't advise it because Wall Street and everything else will be very, very thin. And therefore, you have to ask yourselves how much stops will you put in for your trade, and therefore the same thing, how much you put your profits in, and also let's get this right. If Biden does say something untoward, I'd put my money on that. You'd probably find a lot of the trading platforms will freeze. And those of you who understand what freezing means is that they won't allow you to either, if they allow you to get in on your trade, they won't allow you to get out of your trade. And if you think that's diabolical and disgusting, welcome to the world of retail trading. And that would happen on most platforms because if they can't find a buyer or seller for your position, they will therefore just freeze the platform. Should they do that? You don't know. But when the markets are very thin and very quiet, and remember, Mr. Biden, Corey, what's he suffering from? Dementia or democratic fever?
I think they're one and the same.
Yeah. Corey, have you set my hat over? Corey's got me a lovely hat.
I did. You should be getting that any day now. So
I will wear it with pride, and I'll wear it for a week in the office. It may prove my hairstyle, but it's the same thing. I think loads of you are obviously, we keep in contact with Corey. He's a sort of American agent out there, but I was unaware that how close the election was and how America is basically split very much down the middle.
It's basically it's very very split down the middle here in the U.S.
And I take it everywhere you live is a Trumpite still.
Yes, yeah. Here in Southwest Florida, it's very wealthy, so it's very Trumpville.
My other question, because someone asked me the other day actually, if obviously the possibilities are there that if Trump doesn't survive till 2024, who's the next one in?
That's a good question. I think actually our Florida governor here, Ron DeSantis, would be a good pick. There's another. There's a few. Some had thought maybe Kristi Noem, but I think some of her comments recently are going to put her out of the running. She's a very conservative governor from the state of South Dakota. Rick Scott, Senator Rick Scott, he was our former governor here in the state of Florida. He would be a great contender for the next election. So I think you'll definitely see DeSantis and Scott in the running for the next election.
But obviously, for the Democrat side, Kamala Harris being, 44, very young, she's going to be around for the next 20 years.
I think she's itching for that seat, so she's waiting for Joe to be sent off to the home.
That was always the plan, though, lads. I don't think that a lot of people believe that he's going to make it through the 4 years. I think she's going to.
No, he won't. He won't.
Halfway, she'll be sworn in, and then that'll be it.
I don't even think he's going to make the year mark.
Yeah.
I think even if he's alive, they're going to try and push him out and really force him out due to either dementia or they'll find some excuse. They want Kamala in charge.
No, but that was always the narrative even before the election because she was able to beat Trump, but he could. So that was the narrative. Get him in.
Yeah.
Would you not vote for Kanye West?
No.
What about Dwayne "The Rock" Johnson? I've heard he might be running.
No, I did not.
The one thing we don't miss at Educate to Trade during our webinars is humour. Yeah, there's maybe not a lot of trading going on because the market is very quiet and we expected it to be quiet. What I think we might do, we'll give it another 4 or 5 minutes because I think this is, unless Powell says anything extraordinary, and I think we might close it because I said we are hardly moving. And again, there's only so much paint you can watch drying.
Yeah.
So we'll give it about 3-4 minutes. And again, thanks for all of you for tuning in. Apologies that the market didn't do what we expected to do. However, we'll be back at obviously 7:50 tomorrow for our morning Zoom. And obviously, Jerry and the rest of us will be online for 9 o'clock for obviously the awesome Apple and Facebook's fight off. And again, those of you are trading, remember, I don't know. I think, Julie, what do you reckon? I reckon Wall Street will stay up to about 9:30 tonight.
Yeah, about that. Yeah, I actually think, funny enough, you're probably going to laugh at this, but I actually think the futures will be a good metric for the open tomorrow morning to see how the futures perform for the cash open at 8 a.m. I think that's going to be interesting. So you
I 100% agree with you there. Definitely.
I
the
think
same thought.
Tomorrow morning will be a much better call, I think, than this one here.
Yeah.
Because the dust will have settled. Will be a lot. There'll be a lot more clarity. So I think there's going to be a nice choppy price action tomorrow morning.
Well, that's going to be interesting for the 7:50 show. Obviously, we'll send the link out there, but I think we'll wind it up there. We've done an hour, and hopefully, many thanks to Jerry for his input, and to Bianca again, and obviously Corey. Many thanks for tuning in from Florida, and as Panis just said there from Greece. Panis, you're due to give us an oil webinar when you're free. Fortunately for Panis, he was going to give one the other week, but he caught COVID. So when you're free, Panis, give us a shout, and we'll get you doing a webinar probably sometime next week. One more thing before we go, those of you aware, is month end on Friday. There's certain things that happen on month end, and we'll also go through that again. And obviously, I'll leave you with a comment from the week. Selling May and go away, comeback sent a ledger day. Why has that been saying for 200 years? And will it work this year? It possibly has a chance if the markets stay like this. Okay, have a good evening, everyone, and we'll catch you tomorrow or on the discussion group going into the close, and obviously Apple and Facebook. What else have we got here? Logitech and obviously eBay. Okay, thanks a lot.
See you later.
Thanks, Neil.
Cheers now.
Thanks, Neil.
Cheers, Neil.
Guys.
Cheers, Neil.
Thanks, Neil.